Hi, tax attorney John Hyre here, and going through a few more questions just for frame of reference. I used to have something called the Inner Circle. We used to take questions and do a good deal more besides. So I thought I'd give you a sample. We're restarting it, and so we're taking a bunch of questions and posting them. So we'll get started. So another question I got from my Inner Circle, and these are normally answered behind a paywall. And come September 1st, they'll revert to being behind a paywall. But I wanted to give you a flavor of what we do. We do more in the Inner Circle besides answer questions. We have free-for-alls. So this is structured Q&A. You send them in. I answer them. During the free-for-all, we may further discuss it, or we just discuss whatever comes up, hence the term free-for-all. We also present at least one topic a month, a sophisticated topic, and there will be some old topics in there. There's an archive. So it's a rich environment. Hopefully you are interested in it, and my Inner Circle saves you a lot of money. But in any event, my solo 401k has owned a 5-acre property for approximately 4 years. The property previously had a house that was demolished about 3 years ago, and the plan currently rents 2 camper spaces on the property. The plan has not completed any short-term real estate purchase and resale activity in more than 2 years. So it has done some flips, but it hasn't done any flipping for at least 2 years, which is important. And the person who asked the question suspected that was an important fact, and it is. So if the plan, meaning the 401k, builds a new house on the property, surveys off approximately 1 acre, and sells the house in 1-acre parcel, would the resulting profit likely be subject to UBIT as a trader business, aka a dealer, someone selling inventory? Or would the gain be excluded? Now, I'm assuming this is debt-free because debt could create UBIT, so I'm assuming it's debt-free. I think you're okay. It's not 100%. There's some gray here, but there sounds like there has been some prior flipping activity in here. There hasn't been for 2 years. You've owned the parcel for some time. I think you have an outstanding argument that this was a mere investment. You had appreciating land. You didn't intend to sell it. You intended to sit on it. You have sat on it. You've intended for it to produce income. It has produced income. This is an investment. This is not inventory. Do you have a really good argument? Yes, you do. I think you have a better, I give you on that argument, 65 to 73% chance of winning is my range. 65 to 73% chance of winning if they were to challenge it. Maybe a little higher. Maybe up to 80%. Depends on how I feel that day. Bottom line here, IRAs, 401ks pay UBIT when they engage in what? An ongoing trader business, which usually means selling stuff on a continual basis or providing services. And here, we lack a continual basis. A periodic sale of stuff probably is okay. Now, you got to be careful with that because I've seen case law where somebody had one sale and said it was a periodic sale, and so there shouldn't be any UBIT. What was the problem? Well, the sale was a 30-acre parcel that was subdivided into 31-acre parcels and all sold pretty much at the same time. Yeah, that was arguably one deal, arguably 30 deals. But the point is the level of activity in that case was such that you've got an ongoing trader business. You've got inventory. Here, I don't think you do. I think the odds are very much in your favor. And I think the odds become even better. In fact, so the last sentence, would your answer depend on how long the completed house is held or rented before sale? Well, I gave you the answer without renting the house at all. Now, if you rent the house for, say, 18 months, then I think your odds of winning are well above 90%. I think renting the house, drawing income from the house, having a capital asset that is for the production of income, held for an increase in fair market value that you then later sell, I think the odds of that being viewed as an inventory transaction are extremely low. So if you really want to belt and suspenders on this, I would rent the thing out and I would do it for about 18 months. I wouldn't get cute and do it for 12 months and a day. It's too close. It's too cute. 2 years would be great. I'll take 18 months. If you're 18 months, best I can do. So good question. There's your answer.